Hi folks, Gary Dean here with Sentiment Timing, and this is our technical video report for Tuesday, May 19th, 2026. So in tonight's video, I'm actually going to walk you through actual trades that we made in the trade room today, and it was really all off of the matrix and our liquidity indicators. So what we did was we had this gap down. And when we got this bounce, we weren't seeing there was zero buying from institutions here. So once we got up, and the reason why I took this type of trade is we've been seeing just big moves in both directions out of the blue like this. So the way that I manage the private equity fund is I'm always hedged on a trade. I'm going to be long and short. And then what I do is I manage both sides of them. So when we got this gap down here, we came down, we bounced up, and when we were at the 273, I took both the 273 calls and puts, and then from there, we started coming down. But this is what I want to show you is that once we got up, so this is at 9:39 in the morning. I said I'm going to take the 273 call and put trade. If we continue lower, 271.50, 270.50 is my downside targets. So let's go back and see where it is. And you can see, so this is where we got our high volume reversal bar. So I knew that there was a low coming, but if you actually look, you can see that the low is 270.62. So when we got down to the 271.50, I took some of the 273s off, and then when we came down here and I got the reversal bar, that's where what I did was I closed out the 273s and I took a 271 put and a 272 call because I was anticipating this move. I knew the 271 puts were probably going to be wallpaper, but I was on the side that the calls are going to be they're going to make a lot more than what I was going to lose on the puts. So we were able to close our put positions pretty much near the low on this at the 271.50 and the 270. I think we got out right around that 271 as well. And the reason why is because we missed the target by 10 cents. But again, you see the high volume reversal bar here. So sellers were getting exhausted. Our heavy oscillator was in deeply oversold levels. And here we got a cluster of buy signals. And from there, we started coming up. And then once we got to the 273, we started seeing some a little bit higher than 273. And that's when I started scaling out of the call positions. And I said that I'm going to go back to that because this is, really what I was saying after I put this in. I said there's a chance that the bulls may make a run for 273, 274, and possibly 275. And again, let's go back and take a look at where it is. And so this was our 273 to target 1 was hit. Here's our 274 that's a target 2 was hit. And if we come up and look, 275. So all three targets were hit, and we actually saw selling in each one of them. So holding on to the calls was not going to be the right decision. And you can see we came all the way back down. And so we actually traded IWM really, really well. And it was all based off of just looking what liquidity is doing, because you know that we had a high volume reversal bar right here. When we took out the lows, this is a stop sweep. We saw institutional buying, and from there, until we got up to our target 1, is when we started seeing institutions starting to scale out of it, and that was really, it worked out fantastic. So what goes on from here? Well, right now, what I want to do is I want to switch this over to a longer time period, and I'll show you what I'm looking at. All right, so from this anchor to this anchor, it's 274 bars. So I'm just going to change that because this is going to give us a clue about tomorrow, where you can see we came right into our. So from here, this is why I was getting my targets. And we can see you made it almost identically right up to the very top of it. So this was our primary distribution phase. We almost made it to the secondary, and we're getting sell signals. So right now, what we're looking at is either, this was just a big wave 2 up, and now we're going to make a wave 3 down. Or what's going to happen is we want to find out where the support level is, because this is going to give us our clue as far as what to expect tomorrow. So we have 154 bars. Now we're going to switch this, and we know our resistance to 155. I'll just do that. And you can see this is what the bears need to break through. So the bears held them down on the way up, and this is what the bulls need to defend, because if they lose this line, especially the secondary, it's going to open up the doors for us coming down to the 270.60 level. And if we actually move it to a longer time period, you can see why I'm expecting this is the support level. That's why I was looking at the 270.50. But if that gets taken out, what we want to keep an eye on now is going to be, I'm moving it to a daily chart, because if I open this up, you can see this is going to be normal support. It's on the daily chart, we're looking at the 270, right around that 270.12. That's why I was saying I thought this was going to be a magnet when we came down there. But the one thing that we want to really keep an eye on is, you can see that when we had this drop here, we had our heavy indicator that was into the oversold levels, but we still have a ways to go before we're in there. So to me, I believe that even if we do get a bounce, we're still probably going to come down and test the 258 and possibly 251 before everything is said and done. But right now, I am anticipating some type of backing and filling, and really what I'd be anticipating is that the move is probably going to come somewhere up, and if the bulls can get it through these highs, we're really anticipating the 278, 279, 82, and then up to the 282, 38, which would make perfect sense, because this is our resistance. You can see this is a 15-minute chart, high volume reversal bar. We had an exhaustion bar, and when we got up, we did see selling. But right now, this is giving me an idea that you can see that we have the exhaust, our heavy indicator is extremely oversold right now. So the upside I'm anticipating tomorrow, as long as we don't get any geopolitical, say overnight news that gaps the market down, then what I'm anticipating is that we're probably going to get a bounce somewhere up into this area. And then once that completes, that's when I start looking for that deeper retracement that probably is going to take IWM somewhere into, I would say, really, we could just look at regular support. Well, the regular support is right here. I'd really be looking, if they lose it, we have, again, that 267.57, but my guess would be somewhere down into the 263, or possibly coming down and closing this gap at 253. So that's my really what I'm looking at with IWM. So let's take a look at the spiders now. And again, 2-minute chart, you can see we saw a lot of buying coming down here, but that was towards the end of the day. So let me move back. Hang on one second. Okay, so here is our gap down. Here you can see we had a swing trade short on this candle right here. This was an exhaustion. Here's a swing trade. And from there, once we got in and we saw the exhaustion bar, and what that basically is it's measuring up the amount of say oversold say dots that we're looking at. I don't want to call them that, but that's what generates this. And then you can see we started seeing buying all the way down here. So do you really want to short when you start seeing institutions buying after we had an exhaustion bar? No. And that's when we saw the spiders run from 232.78 all the way up to the 237.70. So that's a fantastic trade right there. Again, you buy 10 contracts on the spiders. You spent probably $1,000 and made $6,000 back in a matter of a few hours. So it all worked out. And then you can see when we came up here, this is where we started getting our exhaustion bars. So we knew institutions were selling. At this point, we weren't even close, because we were seeing some selling. We had an exhaustion bar, but look where our heavy indicator was. We still had plenty of room to go before we were going to see any kind of exhaustion bar or a red dot that's saying be careful. Because when you see the green dots, or the aqua, it's telling you that the selling is getting exhausted. This is telling you that the buying is getting exhausted. And from there, again, if you just took the trade once you started seeing these signals, you had the spiders go from 237.14 all the way back down to 232.52. So really, in one day, you could have made 12 points on the S&P. Some people wait to make that in 4 or 5 months, because that's 120 points on the S&P, and it's really, the calls were pretty much spot on. So you can see, let's just move this out a little bit more. I'm going to move the time frame out, go to 5 minute, and I want to see where spiders actually found resistance. So I'm going to measure it from here, because I know this is going to be too low. So I'm going to use this anchor, move it across 181 bars. Now we're going to go and move this to 181, and it will show us where it hit resistance. So you can see so from this anchor to this anchor, we came right into our primary distribution. We are getting sell signals, and boom, that's what happened. So if it's either really what I'm looking at, because I want to take a look at a 15-minute chart and see what the heavy oscillator here. This is our exhaustion, where we had the 1, 2, 3. That's what this triangle's for. But the thing is, it still has some room to get into the overbought levels. So to me, I wouldn't be surprised to see if this isn't just an ABC move, and we see the spiders trading somewhere up into this 740.63, possibly even up to this 742. But if this gets lost because of geopolitical reasons, now we want to go to an hourly chart. And really what we're looking at is we're probably going to see the spiders trading somewhere down between the 720 all the way down to the 1359, with our secondary coming down to the 703. And you can see there's a lot of, there's selling going all the way up, and we did get them, but we were just getting little dips and they were getting absorbed. But now we're starting to see a little bit of selling. And again, this is important support here at the 731.54, because if they lose that, then we have some support right here at 725. But I'm really thinking that we'll probably make our way down here. So again, I go into every day open-minded with the direction. I'm simply going to follow what the matrix is telling us and what institutions are doing, and from there, that's all it is. I just make the trades, and you can see here on the 5-minute. I want to go back to this, that we saw heavy selling, so this was going to drop. We didn't really see any buying, and that's why I kind of stuck with IWM. Even though on the 2-minute chart, we did see a lot of buying coming down on the spiders. So getting short was never even in unless I was in a hedge trade. But when you start seeing buying like this and exhaustion candles, you don't want to short, because you're going to get stuck in a big short squeeze. So let's see what plays out tomorrow. Hopefully this little see how we made the trades helped you out. And with that, have a great night, and I'll talk to you guys in the morning.